Ladies and gentlemen, good afternoon and welcome to DFM Foods Limited Q4 FY22 results conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the opening remarks of Mr. Lagan Shastri, MD and CEO, concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ashutosh from Systematics Institutional Equities. Thank you, and over to you, sir.
Thank you, Faizan. Good afternoon, everyone, and welcome to DFM Foods earnings conference call. Today for the call, we have the senior management represented by Mr. Lagan Shastri, Managing Director and CEO, Mr. Nikhil Mathur, Company CFO. Before we start, I would like to mention that in today's conference call, some of these statements might be forward-looking in nature. Actual results could differ from those expressed or implied. At this point in time, I would request Mr. Lagan Shastri to make his opening remarks. Thank you, and over to you, sir.
Good afternoon, everybody. A very warm welcome to everyone for joining this session. As has been our practice in the past, I would like to reiterate our strategic priorities which have defined our journey so far. As you are aware, we have identified 4 key pillars of strategy for the company over the past few years, and we have continued to talk about the same. Number 1 is driving accelerated growth. Number 2 is sustaining profitability. Number 3 is continuing to focus on people and talent. And number 4 is continuing to scale up systems and improve our governance standards. On the first point of driving accelerated growth, we were impacted by the third wave of COVID in January this year. This disrupted markets and affected our employees and channel partners. We had a good recovery in the second 2 months of the quarter thereafter, leading to a growth of 6.8% year-on-year in Q4 FY22. This came at the back of continued investments around building stronger brands and creating a robust sales infrastructure. Our share growth story continued in this quarter as well. In Q4, we grew share in the extruded category by over 140 basis points year-on-year pan-India and over 200 basis points year-on-year in our focus markets. This market share growth is underpinned by a continued focus on strengthening of our retail channel sales infrastructure and also our investments in marketing. The company's investments in this channel, specifically retail, have widened and deepened our retail presence, increasing our weighted distribution for our Fritz and Nutcut brands by 340 to 600 basis points in our core market, that is North India. We continue to expand in the north while building scale in other geographies by adding capable distributor partners and establishing our sales routines. Our brands and products continue to appeal to our consumers. Cracks has an inherent brand pull which is time-tested and indisputable. To leverage this inherent equity, we continue on the journey of building iconic brands. We ran a campaign for Cracks rings in this quarter, featuring young and impactful social media influencers targeting teens. It was our first influencer-led viral campaign and which was very well received by consumers. We did, during this time, an in-film integration of Fritz in the movie Badhai Do, which supported building a strong campaign for the brand. Further, we also ran a campaign during IPL on leading direct-to-home platforms, which amplified our reach quite significantly. Our focus on alternate channels such as e-commerce and modern trade continues. We continue to build stronger relationships with leading partners. On the second pillar of sustained profitability, I want to talk about commodity inflation that continues as has happened over the last 2 or 3 quarters. This quarter was no exception. The crisis in Ukraine added fuel to the already existing fire of commodity inflation. The market price of corn rose by 71% year-on-year and that of palm oil by a further 40%. The surge in crude oil prices exerted upward pressure on flexible packaging material, which is our laminates. Additionally, prices of PNG continued the upward trend, rising more than 45% year-on-year. Overall, this significantly impacted commodity prices for us as well. However, thanks to our very proactive and ongoing comprehensive cost management program, we were able to mitigate a significant part of this inflation. The efficiency unlocked by this initiative helped us manage through this challenge. Brand resilience enabled us to take pricing through appropriate garment reductions during this period. Material margins improved sequentially from Q3 by 100 basis points to 39.1% for our product portfolio, excluding the new category expansions. Our investments and forays into improving our price pack architecture and category expansion is progressing in line with our expectations. I've continued to emphasize the need for the company to build capability around brands, sales infrastructure, technology, and talent. In line with this strategy, we invested on advertising and marketing spends that grew this quarter from 7.1% of net sales in Q4 FY21 to 14.1% in Q4 this year, and go-to-market expenses that grew from 1.6% of net sales to 3.5%. The benefits from these investments have started accruing to us in the form of market share improvements. As we move forward, the third pillar, as we have said, has been focusing on our people and talent. At DFM, we recognize that a motivated and capable team can make a huge difference in delivering results. Our leadership team comprises professionals who have honed their skills in highly successful and respected organizations. Further, the talent pool at DFM Foods has deep experience in the food industry. Combined with our work to inculcate a performance-oriented and meritocratic culture over the last 2 years, putting in place reward systems and putting in place training and development programs, we are confident of building a workplace that is preferred by employees as we go forward. The fourth and last pillar for us is, as we do all these three, the fourth one is setting up scalable systems and governance standards. We are strongly focused on compliance and maintaining strong governance standards as we build robust IT systems, digitizing various processes across the organization. The technology adoption we have started a few quarters back is proceeding very well, with 98% of our sales team and 96% of our focus town rural distributors who have been empowered through automation in core geographies. Our technology rollout is empowering our extended teams with data, economizing on time, and improving efficiency, even as we scale up to our non-core geographies on technology adoption. Through our CSR initiatives, we partnered with NGOs to improve the nutritional status of 6 to 14-year-old children in urban slums and rural areas of Delhi NCR and Lucknow. We also conducted plastic waste awareness programs in Mumbai and Noida. All in all, in the space of setting up scalable systems and governance standards, we have moved each subsection over the past quarter. I will conclude by saying that in Q4, we were tested by the twin headwinds of COVID, Wave 3, and high commodity inflation. But we managed to bounce back strongly, delivering a strong market share result and managed to rein our costs well. Our continuing investments are aimed at creating iconic brands and improving our sales capabilities, which we are confident will deliver strong growth going forward. Once again, I sincerely thank you all for joining in for our earnings calls today. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Before we start, participants are requested to ask their questions in one go. Your line will be muted after your questions are complete. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Pranav from Invesco Mutual Fund. Please go ahead.
Hello.
Good evening, sir. So can you just help us understand the various steps to ensure that your market share gains somewhere outside the north as well, and what all steps have you taken, please, beyond your core markets?
What steps have you taken?
So our shares have been our share gains have been reasonably democratic, which means at an all India level we have gained share, and we continue to gain share in our core geographies, which basically are north. What's really, we believe, that are driving these share gains are our strong investments, as I said earlier, around retail sales infrastructure development, and also combined with that, our investments in marketing around brand advertising and creating stronger pull for our core products. So those are the two larger spaces of work that we've done to get this through.
Thank you. The next question is from the line of Kunal Patel from Equilegence Capital Advisors. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Sir, my first question is regarding our material margins. So you improved your margins by 100 basis points in our old portfolio. So that's quite commendable. But how did we manage to achieve this improvement? And in our books, how much more low-cost inventory is there? And how do you see material margins from this quarter onwards? So second question is regarding our grammage. Sorry? Hello?
Yes, carry on.
Yeah. So second question is regarding our grammage. So given the rise in raw material prices, what kind of grammage rationalization we have done in the last quarter, and also overall in last 12 months, what kind of rationalization we have done, and how competitive we are as compared to peers now. So third question is regarding our ad spend and marketing. So as per the results and credit rating reports, the company plans to spend roughly around 25 crores per quarter. So do you have any fixed budget in mind for A&P spend, or will you continue to increase it as we grow over next few years? Sir, fourth question is regarding our other expenses. So other expenses have gone up because of some investment in cost management programs. So how much and where we have spent, and how much we are going to save because of this initiative? And lastly, sir, regarding potato chips, your pack says 100% more chips. So this already being a low margin, highly competitive industry. So what is our monthly burn rate here, and how do you see a road to break even in this segment? That's all from my side, sir.
Thank you. So let me just answer them one by one. So on material margins, how did we achieve these margins or sustain these margins? The short answer is basically two things. One is a very strong cost management program that we put in place almost 4 or 5 quarters before, right after COVID wave 1, which we have continued and has continued to help us keep margins tight and get the right procurement advantages in the right manner to manage the raw material and packaging material cost. The second reason, obviously, as you pointed out, is the ability of the company as it invests in brand marketing. It also allows for pricing power, and our ability to take grammage at the right time, calibrated to competitive realities, allows us to balance pricing, but more importantly, before taking the pricing, to manage the commodity procurement itself. So that's how we've been able to balance, but we have managed both the things, which kind of leads to your second question on grammage reduction. Like any other company, we have appropriately taken grammage reduction. We are completely firm in our belief around the fact that given the investments that we are doing in brand marketing, our ability to continue taking the advantage of pricing power stays with us and is there for us in the medium to long term. So we are cognizant of the competitive pressure, and as long as that is being taken care of, we are taking the right pricing and the right grammage reductions, which we'll continue to review closely, and as and when a need so arises, we'll appropriately take it. On ad spends is one of the, as I said, the key pillars of our investments. One is sales, investments and infra, and the other is brand marketing. That very spend of marketing is allowing us this pricing leverage. Also at the same time is allowing us consumer pull. Now these ad spends, the way I would put it is, we believe whatever is right for the brand, as long as it is calibrated to understand the reality of the growth and the returns on it, and the fact that it's appropriate for the brand, we will invest. Now, it will obviously be limited and constrained by the allowance of the profits and the P&L, and that is what we are cognizant of. So, if you are asking me a budget, that I can't comment on, but what I can certainly say is that we'll take calibrated decisions on what is the right time and how much to invest, basis things as they go forward. As of now, we continue to invest in the space so that we can drive consumer pull. On other expenses, which primarily are in three spaces. One is sales infra and investments as we scale up routes. The second is on people and talent. And the third is on IT technology investments. These are the three spends that we are doing in terms of other expenses. On other expenses, these are the three spends that we are doing in terms of space level investments. On potato chips, the last question you had is what is our thinking? Our thinking has been always that one of the primary reasons of any business to return value to its shareholders is growth. In fact, that is the primary driver of wealth creation. And if any category within the savory snacks allows that growth, we believe, given the competitive reality of the market, we should be present and be testing ourselves in that. Potato chips is in that space where we believe that if we get the right operating model, we can really do well in this space. Currently, our investments in potato chips, it's in an investment phase, and the investments are limited to 3 states of India, largely in the north. As we look at it and understand and test the operating model, we will review all the right levers of growth and profit and press it accordingly going forward. As of now, we are very happy with the current performance in this space, and it's in line with our current expectations.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Rahul Pika from Multi-Act. Please go ahead. The line for the current participant has got disconnected. We'll move on to the next question from the line of Pranav from Invesco Mutual Fund. Please go ahead.
Yeah, hi. So this advertising expense of 25 crores, how does it fit into your pillars? The first pillar, which is profitability. The second aspect to this is, will this keep on, as your sales will keep on going up, say 2-3 years down the line, do you expect this number to be similar as a percentage of sales, say 3 years, 4 years down the line? And also want to understand that, when earlier interaction, it was kind of mentioned that the potato chips market is more of a commoditized kind of a thing where margins and all really are not, top class. What transpired your decision to increase, or get back into the potato chips market? And I might have some counter questions, so please don't disconnect the line. That's my sincere request to you. Go ahead.
So on potato chips, in the past, this has been an investment that we have done over the last 4 to 6 quarters, and it's an investment where we are testing our understanding of the space, and we believe this is a future growth opportunity and remains so. Profitability in the space of snack foods continue to be volatile, and it is also similar in terms of volatility across the other spaces that we operate. I would request not to ask questions where I have to tell you what will happen in the coming quarters, but I can say this for sure, that as a management team, we are cognizant of all the opportunities and the risks associated with it, and we believe currently this is the space to invest, and we are continuing to invest and test out the operating model in this space.
Hello?
Please go ahead.
Hello?
Yeah, there was one more question I kind of missed that, Pranav, is around advertising and promotions. So advertising and promotions, we believe we are in the investment phase of creating brands which from the base level of good Indian brands to becoming iconic Indian brands. So significant amount of investment is going into doing that. We believe given how our growths come in and how things happen, appropriately correct investments will continue to happen in this space from our side. Beyond that, I will not be able to give you a number or a budget as to where this will look forward. Like all I can say is like any other company, we are in the business to create growth and profitability, and we are aware of that. And over the next few years, we want to be in that space where we are growing and are profitable.
But cash profits is something will you look at when you're considering these advertising spends is my question to you. Hello?
Like any other company, cash is the lifeblood of any organization, and we look at it very closely and absolutely will look at that.
Okay, thank you and all the best.
Thank you. The next question is from the line of Rohan Advan from Multi-Act. Please go ahead.
Yeah, thanks for the opportunity. Sir, my question is on the market growth itself, which you said is at 3%. So this used to be double-digit kind of growth in the extruded snack segment. So what has changed and why is this tepid growth even under a context of say schools reopening, etc. And secondly, if the market growth itself is so low, shouldn't we be using our ad spends at times when market is doing better? Because while you are gaining share, the absolute sales growth is very less, leaving no space for absorption of ad spend. So if you could just throw some light on this, thank you.
So as you're aware, the industry of extruded, which is a subcategory of the savory snack space, if you would put it across age groups, extruded generally is in the younger age group, and therefore school shutdowns or anything that happens in that space is more affected by that kind of a situation in the economy. So a large part of the issue around the growth being tepid in extruded category has to do with the fact that that impulse behavior of young kids may or may not be happening at the level at which it was happening before the COVID period. We continue to remain confident as the schools open, which they did for a few months and then they shut down again because of COVID wave 3, and then we went into, I would assume, examinations which were not open for everybody, only open for class 10 and 12, and then we've gone into summers and all that stuff, right? So as the schools open and sustainably so, we remain confident that this category is likely to boom again. On the second aspect of if it's not booming, why should we invest and should we wait for the booming to happen? We are a leader in this category and we believe we understand the category better than anybody else, and therefore one of our responsibilities continues to be to invest not only in the brand but also in the category as a leader, and that's what we continue to do, and we are very confident that as we keep doing that, it will turn around in the near future.
When you've seen schools reopen, have you seen, there might be a period of, a part of the quarter. Have you actually seen sales, the market growth being strong?
As I said earlier in my commentary that in this quarter, the first month where wave 3 was there, we got affected and we recovered strongly thereafter in Feb and March. So that's how I would leave it at that.
Thank you. We'll take the next question from the line of Sachin from RTL Investments. Please go ahead.
Yeah, I have a couple of questions on my side. So one, you said market growth of 3%. Is it possible to split it between organized and unorganized? And the reason to ask this question is one of your listed peers report almost like a 16-17% growth, and they spoke about growth in extruded being almost, very similar. So it seems done much better. So is there a trend where organized are doing better and, relative to organized, we have not done as well? Also on your market share trends, I think till last quarter you were also talking about QOQ movement as well, not just YOY. So if you could just highlight what has happened QOQ, in this quarter. Again, this is leading into the first question itself. And you've spoken about strong recovery in Feb and March. Would it be fair to say that there was double-digit kind of growth these 2 months? Yeah, that's all from my side.
So, on the fact that how much is unorganized and organized, generally speaking, this category about 50% is organized and 50% unorganized. We will not be able to comment on the split between those two growth structures. Enough to say that we grew share. What happened to the other players, including locals, is something I would not want to currently comment upon. On the second part, just for my understanding, what is the question?
This is the operator, so we are not able to hear you. Should we move on to the next question?
I think I am done. Yeah, thank you. Yeah.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Naystar Parekh from Latif Capital. Please go ahead.
Yeah, hello. Yes, so my question is, can you give us a split of volume and price growth on the revenue side for this quarter?
So your voice was not clear. Could you repeat that question?
Sorry, my question is, can you give a sense of volume and versus price growth in this quarter? Sorry, am I audible?
In our case, it is similar because absolute pricing has not affected volume and price growth. If that helps.
Sorry, you have not taken any price increases this quarter, so the entire sales growth is volume growth. Is that what you're saying?
Absolutely in this quarter, the quarter that went by, we did not take any absolute pricing. The pricing that was taken before or after are the things that we talked about when we take grammage reduction. But this quarter we did not do.
Oh, yeah. No, I was talking about YOY growth. So the YOY 6.8% growth, are you saying your volume growth will also be in the same 6% range?
We do get it.
Year on year?
Yeah. So we do year on year. We did take pricing. I would not have an immediate number right now, but you can take it offline and write it in, and we'll tell you the breakup between pricing and volume growth. But over year on year, we did take pricing, so there will be a volume and revenue growth split. Yes.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Nilesh Shah from Envision Capital. Please go ahead.
Yeah, my question is around, this investment phase of ours, and this has essentially been the first full financial year where we have invested aggressively, and we've, of course, in the process reported a loss as well, which is pretty okay. But I just want to understand that what is the kind of investment period that kind of, we envisage? Is this going to be Another 1 year, another 2 years, another 3 years? If you could just basically throw some light on that.
We believe that investment is something that has to continue always and consistently in a going concern in its brands and infrastructure. We'll continue to do this. We have initiated that work right after we came in after wave 1, and that we continue into the current year. And we believe we will continue to do it as and when the business and the company demands or needs this kind of investment.
So there is no kind of a time frame that to which we will continue to basically, I mean, one is of course to keep investing on a very steady state kind of a basis, and the other is to basically accelerate quite significantly. So are we kind of saying at this stage that we have no time frame till which this acceleration continues?
I would rather avoid commenting on that directly, but having said it, as I said, that we will calibrate our investments appropriately given an understanding of how returns come through. So that is any other responsible management, we will continue to do so. But currently, and like any other management, responsible management, we will want to invest behind our brands, and currently that pace continues.
Okay.
Does that kind of give you a sense?
No, unfortunately it's not giving a sense, but I will still ask it the other way. You've increased your spending on advertising and go-to-market by 40 crores in this financial year. You have about 35 to 40% gross profit margin. I'm assuming you have another 5 to 10% as a variable kind of expense, which means that there's a 25 to 30% contribution margin. Assuming you do not up this incrementally by 40 crores and you keep spending extra 40 crores, say for another 2 years, it means that you'd probably have to get to 1,000 crores of revenues in the next 2 years to be able to recoup this additional investment. Is this kind of maths is what basically even you're kind of in a way working on, or is that the kind of thought process?
We will, let me put it this way, that we'll continue reviewing our performance on revenue and growth parameters and review the investments that go in to drive those growths. Our ambitions remain strong, and basis which we are going and continuing to do these investments right now. And our confidence on the category and the business is strong.
Okay, so let me ask once, because you're talking so much about the category, what's the kind of growth rate that you expect in the category? I mean, in the past, what has been the growth rate of the category? Of course, in the last year, you've said the category has grown only at 3%, but what's your outlook on the category growth?
So again, you're asking for a forward-looking understanding which I can't.
It's on the category. It's not on the company. I'm talking of the category.
I can do say, in a historical perspective, the category grew pre-COVID in the range of 15 to 20%. And it has gone down to these levels over the last 2 years. So that is where I would stop myself.
Okay. Thank you.
Thank you. The next question is from the line of Nestar Parekh from Latif Capital. Please go ahead.
I have a couple of questions. And the first one is continuing to what the previous participant was asking, right?
Could you please use the handset mode? The audio is not clear from your line.
Sorry, is this better?
Yes, please go ahead.
Yeah. So a couple of questions. The first one, continuation to what I think the previous participant was asking, right? On advertising and marketing, how do you kind of look at the ROI or whether that advertising and marketing is actually getting you the benefits? Because if you just look at year on year, just in advertising you spend 10 crores more and just got incremental like 9 crore sales now. Obviously there would be some future benefits that would come, but how do you judge whether what you're spending on advertising and marketing is giving you the benefits that you sought out?
We normally, like any other strong and good company, for all our key brands, we track critical brand metrics across distribution and consumption parameters. It is done through stratified sampling and a proper research, and that's done on a monthly, quarterly basis, and appropriately, periodically, it is reviewed and tracked. Along with that, like any other company, for advertising, we get BARC data and competitive data on which responsibly we go through each of these things in detail and look at our ROI on the same over a period of time.
Is it possible to share any of those besides the market share point you shared? Can you share anything else for us to also get a better perspective?
No, we can't.
Okay. And can you give a breakup of what is the split between digital, ATL, BTL on the 20 crores that you spent this quarter?
Yeah, media strategy is something which is very, very confidential. But what we can say is, again, as good marketing people, a proper media mix is deployed, looking at the returns on each of the channels for each of our brands.
My question is how much, even if you can't give the whole split, what I want to understand how much of it is, really at the wholesale level or the dealer level where we're spending, for the benefit of the wholesaler or the dealer or the retailer, because that in a sense is, it is kind of passing on certain benefits, if not via direct discount, something else to the dealer. So I just want to understand how much of it is that actually.
Your voice is very, very sorry, could you repeat in one line the question, because it's very garbled, unfortunately for us. There was a lot of echo.
Sure, sorry. No, my question was, I just want to understand, how much of it was actually at the dealer or wholesaler level, where which is basically, indirectly, giving benefits to the wholesalers and the dealers. I just want to understand that in the advertising and marketing line.
So investments happen both for the consumer and for our trade channel partners. And when I articulate our strategy around consumer marketing brand investments on one side and sales infra and retail investments on the other, it is not that one eats into the other. It's always a choice and a mix of both. So the fact that we have to invest into relationships with distributors, retailers and wholesalers is largely independent of our investments behind marketing. At a very big level, they do kind of come together, but they are two independent strategies coming together. So they don't they kind of be a more integrated whole rather than really be a choice between the two.
Thank you. The next question is from the line of Harshit Toshniwal from Premji Invest. Please go ahead.
Hi, am I audible?
Sir, the audio is very low. Please increase the volume of your device.
Is this good? Hello?
Yeah, please go ahead.
Yeah. So, sorry to come back to the previous questions itself, but just want to understand one, that is it that the advertisement which we have done this quarter, you expect these to give some tangible benefits? Is it that we did a lot of this in the last 1 or 2 weeks or the last month of the particular quarter? I want to get a sense, because the same getting reflected in revenue is something which the ultimate motive is. And I mean, say from a 1-year time frame, 2-year time frame, what is the aspirational EBITDA which net of advertisement you guys want to come to at a stable level? Because so some sort of understanding of where the trajectory could end us with.
Both sales investments in infra and brand investments in marketing kind of take time to start giving you sustained pull in the market, and once one sustains this over a period of time, they start giving. So it's not that you put in something and the next morning you start getting significant upside, but this is something which all good managements do, is that they have an approach and then we kind of build it over a period of time. So that's the answer to your question.
No, I think I didn't answer it entirely. Just want to understand that, is that, so I understand that there will be some time gap, but given the category, a lot of brand advertisement would result in some uptake over the next 3 months, 6 months. There is some near-term correlation to the advertisement, and more so if it is performance-oriented ones, the one. So which is why I'm trying to understand that, I mean, is it in anticipation that schools are opening, etc.? A big bang advertisement is something which was needed to put us back in that path itself. So just wanted to get some color on the kind of advertisement, whether brand advertisement, was it performance-based marketing within brand, is it television-oriented marketing, or how? I mean, some color on the advertisement strategy. I'm not asking the future numbers, but the basic.
Brand advertising is investing behind multiple brands of cracks, fits, curls, and rings. So cracks, rings, curls, fits are what we invest behind strongly. We also do some digital advertising for a couple of our smaller products that we have, and that's the approach we do by brand. The individual brands themselves have a full leg in and a media mix which is appropriate for that particular brand. So depending on which brand we are talking about, they will be slightly different and will be tuned to that brand. Normally marketing happens in a manner where each of these brands are given their space in comparison.
Largely it's television advertisement, if I understand it correctly.
Sorry?
It's largely the television-based brand advertisement.
It's a mix. Media mix, I said before, I don't want to disclose the media mix per se, but it's a mix, and in the mix, it always includes television, BTL, ATL, digital, it has various legs. The ratio and salience of those legs by brand or at total level, I would not want to disclose.
Got it. Sure. Thanks a lot.
Thank you. The next question is from the line of Rohit Balakrishnan from iThought PMS. Please go ahead.
Hello, am I audible?
Yes, sir.
Yeah, hi. Thanks for the opportunity, sir. A few questions. One was, in terms of our current capacity, what would be the peak utilization, or what kind of utilization are we working with, and what kind of, is there any outsourcing, etc., are we doing? That was number one. Should I ask all questions ahead, or?
Yeah, please ask all the questions.
So that was one. Second was, given in terms of just a broad sense, in terms of the GTM that we've done in this financial year, could you share some sort of qualitative sense in terms of what this has yielded in terms of any, whatever metrics you can share in terms of the GTM investment? I'm not talking about the marketing as such. And third question was, sir, in terms of any new capex, are we planning, and if yes, could you share where are we planning this capex, within North or any other part? These were the three questions.
On capacity utilization, we currently have capacity to take care of our near-term growth aspirations. But having said that, geographically or by segment, if we believe that we need to invest, we keep looking at it on a periodic basis, and as and when required, we will invest in those additional infrastructure or capex. So we have that runway right now. The second point I think you asked is, are we outsourcing? Yes, we are outsourcing a part of our product portfolio. I just wouldn't want to say which one, but we do outsource. So it's a mix of our own investments and outsource support. The second question I think you asked was GTM. Just to give you an overall perspective, I was just looking for the data, but in general, we have over the last 2 years gained on our key brands of curls, fritz, and even rings and nut cut. We have gained both numeric distribution and weighted distribution sustainably quarter on quarter over the last so many quarters. Is the way let me see during the next minute or so if you can dig out, but in the range of 300 to 600 basis points is the kind of range of distribution increase that we've been able to get between these programs of fritz, curls, nut cut, and rings. The third question was. If you could just repeat the third question.
Third question was on capacity expansion, whether in this geography, whether in northern markets or in other markets, any plans? And if I can ask if I can ask just one more question back on your GTM. The purpose of asking that question was, so essentially what we understand is that we are very strong in the northern markets, and my understanding, or this is something that you can clarify whether it's right or not, but GTM is to also not only for the core markets but also for the newer markets. So what I wanted to understand, maybe qualitatively, was that how are we doing in the non-core markets, which is beyond North India? Have we gained share, or anything that you can share on that? That would also be helpful.
So what we call our focus markets are North and East, and our core markets are North. So for our focus markets of North and East, we have grown share in both the markets, and continue to gain a strong share and distribution even in the East, which is our other focus market. And on capacity expansion, I said that earlier, that we continue to look at it. Currently, we have capacity as a runway, but if we find geographies or spaces or product spaces where we need extra capacity, we'll review periodically and invest as and when required.
All right. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Lagan Shastri for closing comments.
Thank you. Thanks a lot for taking out time, as always, and showing the interest in our company. Thanks a lot. Thank you.
Thank you. Ladies and gentlemen, on behalf of Systematics Institutional Equities, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.